GBP USD broke below 1.35, and now a short-term support test is deciding whether this is just a pause or the start of a deeper slide. The pressure point is simple. Sterling's drop below 1.35 puts short-term momentum on trial. GBP USD forecast is the search phrase, but the immediate question is where the next break or failure actually sits. That is why traders keep repricing the same headline through multiple markets at once. The pair fell under the psychological 1.35 level and started probing the 9-day exponential moving average, a short-term trendline traders use to judge whether momentum is merely cooling or truly turning. Technical levels matter here because large FX markets often use those zones as trigger points for positioning, not just as visual chart decorations. This sets the first macro anchor before momentum traders and policy watchers add their own reactions. Key levels were 1.352 to 1.354 as near resistance, roughly 1.348 as the dynamic EMA area, and 1.345 as the next major support zone if selling keeps pressing. In easy English, an EMA is a moving average that gives more weight to recent prices, so traders use it to judge short-term momentum. At this stage, technicals and macro are reinforcing each other rather than pulling apart. For people typing GBP USD forecast, the market signal matters because it feeds into broader dollar, liquidity, or risk conditions. On the macro side, softer Bank of England expectations and relatively resilient US data gave the dollar help, while increased volume during the drop suggested the move was not just noise. That is the part that starts to spill into broader liquidity conditions. The mechanism is policy divergence meeting technical stress. When a pair loses a major round number while central bank expectations also lean against it, chart traders and macro traders start reinforcing each other. For crypto viewers searching KW, the broader importance is dollar behavior. When the dollar side of major FX pairs gets stronger, risk assets often feel the squeeze too. Once the mechanism is visible, the move stops looking random and starts looking systemic. For crypto viewers, this matters as a dollar story. A stronger dollar against major currencies can tighten broader risk conditions and change how aggressively global capital reaches for speculative assets. That does not mean crypto copies cable or the Aussie tick for tick, but it does mean global liquidity and risk appetite are being priced in the same macro neighborhood. This is why risk assets often feel the change even when they are not the market named in the headline. What remains unclear is whether sterling buyers defend the short-term average quickly, or whether the break below 1.35 becomes the start of a cleaner momentum shift toward lower support. Watch the EMA hold or fail, watch upcoming UK inflation and growth data, and watch the Fed path because the dollar side of the pair is doing as much work here as the pound side. The unresolved piece matters because macro reversals often begin with an argument about durability. That leaves GBP USD forecast tied to the next macro confirmation, because one session move never settles a bigger liquidity story by itself. If the pair confirms the move, the macro message gets louder. If it snaps back, this becomes another reminder that key levels matter only when follow-through arrives. The next confirmation will come from follow-through across linked markets, not one isolated print.